I'm going to use Mpumalanga 2020 prelim exam to show you the calculation of interest expense in a scenario where you're probably not given the rate of interest of the loan. So if you look at that paper, it was on adjustment number I. So it says the loan statement received from Borrow Bank on 29 Feb 2020 indicated the following. The balance at the beginning was 2,509,000. Then the repayments were 900, and then the interest is a question mark, and then the balance at the end is 1984. And you are expected to calculate interest expense for the sake of the income statement. So if they give you something like this, this is fairly easy. What I'm just going to do, I'm just going to copy what is already there and then just show you what you're supposed to do. So my balance here at the beginning is given as 2,509,000, and then my repayments are given as 900, right? Repayments, and then my interest, which is capitalized, is a question mark. And then my balance at end. My balance at end is given as 1984,000. Okay, so the first thing that I just want to explain is that when they say interest is being capitalized, it simply means interest is added to the loan. Like they use the compound interest concept, where the interest is added to the loan in order to increase the value of the loan, right? So what you just have to do in this case is that you need to know that this is the balance of your capital, that you the balance of the loan that you did at the beginning of the year. Repayments reduce your loan, and then interest will obviously increase it in order for you to get that. So the easiest thing to do, there are two ways of doing it. You can actually work from the bottom up like that. If you work from the bottom up, because this is an equal sign here, it means these figures must change their signs. So I can get my interest by saying 1984,000. Then this, because it's a negative, when I'm going up, I'm going to add 900,000. And then this, because it's positive, I'm going to subtract 2,509,000. Right? So I want to show you, I'm going to show you the alternative method. So I'm saying 1984,000 plus 900,000 minus 2,509,000. That will give me 375,000 is my interest. But I know that if you, for students that are doing pure maths, they would obviously want to use the X method. So if you're using the X method, you can start from the top. So this is method 1. The second method here that you can use the X method, which means I'm going to start with the 2,509,000 minus 900, because the repayment reduces, interest will increase, so it is plus X. So my interest is X, is equal to 1984. So then you have to make X subject to the formula, meaning to say these two figures here need to cross the equal sign, and we know that when a figure crosses the equal sign, it changes its sign. So for me to get X, I'll have to say 1984,000. This must cross the equal sign, which makes it a negative 2,509. This, when it crosses the equal sign, it becomes plus 900. More or less, you can see that it pushes you back to what I've already shown you there, because here the 900 is being added and then the 250 is being subtracted. So it's still the same concept. So instead of struggling or wasting your time doing the X method, because obviously you have to do a lot of things, you are constrained for time if you're writing the exam, it's rather better you just do bottom up. You work from the bottom going up, and then you add that, you subtract that, because just reversing the signs, and then it will give you 375 as your interest on the loan that you need to record.